Hey traders, let's take a moment to thank and feature one of our top sponsors, FX2 Funding. If you're looking to get funded, listen up. FX2 is offering traders the chance to trade with up to $200,000 in simulated capital and receive up to 85% of their results. If you're interested in getting started, use the link being dropped in the chat or the link down in the description below. If you pass the evaluation, you'll receive your fee back and gain access to your new account. FX2 allows traders access to a wide range of assets and allows traders to hold their trades over the weekend. FX2 is giving A1 Trading Show fans 15% off the evaluation fee if you use promo code A1Trading15. So if you'd like to learn more, again, use the link being dropped in the chat or the link down in the description below and use code A1Trading15 at checkout for a discount on any of their evaluations. Now back to the show.
Hey everybody, welcome back to another live stream. We are back in the studio for another week of trading, taking a look at markets, and it's a busy one. We've got a lot of stuff on the radar. How's it going, James? Welcome back to the stream, to yourself as well.
Hey, I'm doing good, Nick. How you doing?
I'm good. And James, I had an idea before we jump into the news. I thought this might be fun to start doing, and maybe we can. James is good at this kind of stuff, so maybe we can have this be part of your daily role on the stream. If we switch over to my screen for a second, check this out. I just put a poll in the Telegram channel, and I figured it might be fun if we started doing like daily polls just on random things. It could even be something as random as, I don't know, who's going to win the Super Bowl or just random things like this. I figured it would be fun to do daily stream polls. And also it would be a nice way to encourage people to join the Telegram if you're not already in there. So I'll do the first one here today. But James, I think you'd be good at this kind of thing. So our poll of the day is, do you think gold moves up or down this week? And if you guys would like to get in on the voting, we're going to be doing these hopefully more often. Again, it should be fun. Make sure to join the Telegram. We're linking the chat right now. If you guys would like to join the Telegram, just shoot us a message, ask for the Telegram link, and we'll get you set up. Gold is going up, gold is going down. Let us know you guys' votes. Sorry to take over there for a second, James, but I thought that was a cool, fun idea to maybe start doing on streams. What's on the radar for us, James?
Yeah, so like you mentioned earlier, we have an incredibly busy week this week. You can see all of these red folders here in Forex Factory. That means that is potentially market-moving news. And we're not going to go over all of this right now, but we can hit a couple highlights. Like tomorrow, we're going to have some stuff going on over in Europe. We have UK, the Claymont count change. That's always a big deal, as well as we have our PMI numbers for the Euro area, as well as the UK and the US flash manufacturing and flash services PMI. Those will all be happening tomorrow. And then way later on in the day, Australian CPI. Moving on into Wednesday, the Bank of Canada is going to have their interest rate decision, currently forecasted to remain unchanged at 5%. And then on Thursday, same thing for the Euro area. They are also getting their monetary policy statement, their new interest rate decision, also currently forecasted to change. One of my lights just went out. Also forecasted to change, remain unchanged at 4.5%. And then lastly on also on Thursday, I should mention advanced GDP numbers and unemployment claims here in the U.S. And then lastly, on Friday, we're going to finish up with some more U.S. news, core PCE price index, and reviews consumer sentiment out of the University of Michigan. So lots and lots of stuff to keep an eye out on. We're going to get 2 new interest rates this week, both forecasted to remain unchanged, but if there is a change there, that'll definitely be market moving, as well as some CPI numbers, some GDP numbers, and pretty much everything in between.
Yep, fair enough, James. And yeah, it is a action-packed week. There's one added thing that we'll probably cover a little bit on the stream here and there. This week is also really big for megatech earnings. Megatech referring to companies like Amazon, Apple. We also have Microsoft. We have some big companies that are reporting their earnings, which will likely have an impact on indices if you're an indices trader out there. But thank you, James, for that run through. And again, maybe we'll try doing that poll more often, but maybe the plan is we'll do like a poll the night before, and then we'll pull up the results or something like that. But I figured it might be fun to try and do going forward. So James,
Yeah,
thank you for the
absolutely.
update, and we'll talk more later.
All right. See you.
All right. And yes, guys, so we have got some market moving stuff already happening here as we get into the day. I figured we'd start with probably one of the hotter topics out there, which is gold. As I mentioned, we have our votes coming in right now. Let's take a look and see what the results are looking like so far. So we've got 65-35. Gold is going up versus gold is going down. So a lot of you guys here who are with me seem to be favoring the gold is going up side of things. And again, let's break that down. Is that in fact going to happen? By the way, like I mentioned, if you guys would like to join this Telegram chat, this channel, we put out a daily analysis, tips, tricks, ideas, all sorts of good stuff. Send us a direct message. There's the link. It's in the chat right now. Shoot us a message. Ask for the link. We do like to meet each person that comes into our groups. It is kind of just a thing that we do. We like to, make sure we're talking to not robots, talking to people. We have had spammers and, bots kind of join our stuff and ruin it. So if you would like to join, shoot that, click that link and shoot us a message. Anyways, I've talked about gold here a good bit recently. And the question is, we've hit this target that we were talking about last week. We pointed out that if price broke here, very likely to go zone to zone. And it in fact did that. Now, I can't pat myself on the back for that because I didn't take any long or short trades on gold last week. I've been really on the sidelines with gold. I have not taken any trades. And, I'll give you guys my bias here. I think that as we hit this level of resistance, there's probably a good bit of bearish pressure. And we can already see that happening, right? You've got this wick off the top. This is a daily chart, by the way. We can really learn a lot from this daily candle. You can see we had a huge rejection candle right here, and then some follow through here this morning. But the question will really be to see if, in fact, this candle is able to hold those gains for the bears or not. I will say this too. If this price breaks through 1980 and stays above, notably, guys, let's actually drop it down to the 4-hour chart for a second. If we get above and stay above this area of resistance here, 1997, which would involve us breaking into the 2000s. If we're able to get up into that area and stay above that, like close outside of this area, then very likely, I think our next move there would be a push on up to the highs, right? I'm talking about the all-time highs. I'm talking about 2050 to 2070, somewhere in that region. I think it's very possible that we do see that expansion move on gold if we're able, like I said, to break through this. But right now, sellers have something to hold on to. There's something here for sellers because, again, we saw big rejection off this wick, and this is not necessarily confirmed bullish just yet because, again, we have not broken through this level. What I would say is we've got this very important range here to discuss. On the downside, if price is able to close underneath this wick low here today, I think sellers might have actually broken in to this what seems to be an impossible to break uptrend. So watch these two levels, guys. This is to clarify the levels that I'm talking about. The two white lines are 1965 and 1997. So if we're able to break and close outside of these areas, I think it marks a kind of either continuation of this trend or a break back the other direction. If that makes sense, if that was helpful to you, can you guys do me a favor in the chat? Just let me know by clicking or typing yes. And also, if you're enjoying the stream, do me a quick favor. It takes 2 seconds. Hit that thumbs up button wherever you're watching. It will help to get the stream word out there, more people watching the stream. We would really appreciate that on the show side. We are trying to grow our audience. We're trying to do our best here to provide value to the community. So type yes in the chat and hit that thumbs up button if you're in support of today's stream. We do really appreciate that. Anyways, to go along with this, we've got to talk about the US dollar. For those of you trading currency crosses against the US dollar, I'm talking euro dollar, pound dollar, dollar yen. Please note that when I do the dollar analysis, when we talk dollar with Ivan or US dollar, you can expand this to most US dollar currency pairs. So if you're trading something and I'm not talking about it, note that the US dollar currency index is going to set my bias for everything that is involved in the US dollar. Barring gold. Gold is the only one that's a little bit different because gold has a bit of a risk off vibe to it, similar to the dollar, right? Gold can spike higher on concerns about the war, etc. Anyways, here's what you need to know about gold, the dollar index. We've got a long-term upward trend that's being challenged by this recent downward trend. Okay, we are at decision time. We're in a consolidation zone. Again, highs and lows marked out on the chart. And I think you probably see, in my opinion, more likely to move higher than lower. But if I'm wrong, then I'm wrong. I do have a trade open, and I am short Euro USD. So I am betting on the continuation of this dollar uptrend. And if it doesn't happen, I'm going to take a stop loss. Now, I'll show you my euro dollar trade in just a second, but let's understand this dollar index is moving higher on the daily chart. And when we drop it down to the 4-hour chart, we are in a consolidation zone. So for bulls and bears, here's what you got to understand. If this level breaks to the downside, we can clean our level up a little bit here. So if we break support here, right, I think we have a good shot at seeing a move down here, and that's why I will stop out on my euro dollar short if this thing breaks lower. However, if we see a move higher and we break through the highs, then that would be obviously really good for my euro dollar trade, and I think bulls probably get strong upon a breakout of this 106 level. Now, to confirm some of these moves, we will take a look at the commitment of traders data in just a few moments. We're going to bring in Frank for that. I want to just say, in terms of the commitment of traders data, if you guys aren't familiar, it is a way to look at what smart money is buying and what they are selling, according to the commitment of traders data, which tracks positioning from hedge funds, banks, etc. So if you want to see what institutional traders are up to, stick around for a minute. We'll be right back with Frank after this quick break, thanking our sponsors who make this show possible. Frank will join us with the COT report in just a second.
Attention A1 Trading Show fans. If you're interested in getting free access to the EDGEFINDER or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
As we are back with Frank. Hey Frank, how's it going?
Hey, good. How are you?
Good. Again, starting out another week here. We've got a big earnings week out of the U.S. A lot of stocks report, and so far, not looking too hot for stocks yet again. We are facing a little bit of a red Monday here, and with that little bit of dollar strength coming in, I wanted to chat with you about the commitment of traders data here and see what is kind of the latest out of this. What stuck out to you about COT report this week? Anything notable?
Yeah, so the changes were, we're seeing more buying of the indices. The dollar was actually a sell from last week. It doesn't necessarily mean that it's weak, but the change to the downside is on the dollar, and then we see S&P, gold, NAS to the upside. However, I'm not sure how this will play out throughout the week because one, gold is very overbought for how the short time span of where it went up to was it was propelled by the conflicts in the Middle East and just a bunch of uncertainty. So it's not necessarily bearish, but to see it run so high that quickly kind of seems like it's got some room for pullback at least, and it hit this very substantial level on the 1-day chart. This is the NAS right now. I guess I'll talk about this first, but I bought NAS this morning because it's kind of at this make or break zone here. I've been waiting for this price to come down to the bottom of this channel and hoping to see some kind of bounce. If it doesn't, we have the 200-day, which is substantially lower, coupled by some support around this zone, 13,800s. So if it breaks under these highs, then I'll stop out and I'll look to re-enter at some point down here, depending on what market conditions are. But yeah, hoping for a bounce on NAS. I guess we're both in that right now. Gold, unfortunately, I took a short last night and price came all the way back up here, stopped me out. But it's still looking not very strong. What I would like to see is some kind of pullback to this zone in like the 1940s or even the 30s where this support is. So yeah, I'll probably keep looking for shorts on gold and longs on the indices, as long as this price level holds up. If it doesn't break above this on gold, and if NAS doesn't tank underneath that 200-day moving average.
Sure. Yeah, no, that's fair. And I think, when it comes to the NASDAQ, that chart that you've drawn up, let's see if we can hold that level. And same thing with gold. I mean, gold is at a really pivotal spot. It's an interesting week, to say the least. You've got gold and NAS at very critical spots. And, the other thing too, Frank, is you've got the VIX is trading higher. The VIX being, of course, the volatility index. Take a look at that. The VIX being higher, trading at 22.21. This is going to show you that, markets are moving right now, right? When you have the VIX up, that's going to mean everything is explosive. Everything is moving faster and farther than people are thinking. And, it's one of those things. If you're a range bound trader, right, this can be a really tough time because, again, if you're trading a range back and forth and the VIX spikes, it's going to probably break out of ranges easier. So anyways, something to think about for you guys out there in the audience. Keep an eye on the VIX. It stays elevated. Will things continue to be elevated? Well, we'll see. One of the big drivers here is, of course, the 10-year, which we've talked about quite a bit on the show here. The yield spiking just to 5% on the 10-year. This is, of course, but government bonds. 10-year being at 5% is it's a bit scary for markets, and it just shows fear is kind of in the atmosphere. Bond buyers are demanding more yield to take a risk on investing in the U.S. Again. It makes sense, right? Yields going higher. The U.S. is involved in, by proxy, a couple of different wars right now. It's got a massive debt pile up. It's got higher interest on that debt that it's got to pay. Is a bit of concern, and I think it's an appropriate concern. I'm watching the bond market, and I might start picking up something as more of a trade, but I'm not quite even yet convinced. I don't know, Frank. At what point? I know, obviously, bonds, they don't generate that much, and when we're young, it's probably just better to be in stocks and take a bit of risk. But out of curiosity, what rate would get you to nibble on some bonds, TLT? At what point would it be 5.5%, 6%? At what point do high yields represent a competitive price to buying stocks?
I'm not really looking at bond market, but I know that TLT is at like its lowest point since inception, right? So prices are
like
incredibly low, and that's just because of monetary policy going on right now. So if you want to buy TLT or bond prices at the lowest point they've ever been, then this is the time to do that. But you know, just seeing now that the 10-year has crossed above 5 is pretty alarming, and it's not like I think that yields will come down anytime soon. I think a lot of investors are expecting yields to rise for the long term just because, they're not gonna do anything dovish anytime soon, not until inflation is at its target, and even once it's at 2%, are they gonna keep it there for however long? That's the question. So yields are likely to remain high, and I would say that probably once we see, it's not really a price or a yield point, but if we ever see the 10-year get higher than the 2-year, I might start to look at buying TLT or bonds in general, just because, when the 2 years rising faster than the 10-year, it's showing that accelerated pace of like that market reaction to interest rates rising. So if we see a slowdown in the 2-year and the 10-year kind of catches up and maybe crosses above, then probably start to look at TLT. But up until then, I'm bullish on the stock market, and it's like timing bullishness, because I've been saying I was bullish, but then talking about seeing NAS complete this move to the downside just so we can get a better read on what's going on and potentially good entry. So yeah.
You've definitely been more patient than I have been on the indices. I've been taking some L's recently on the indices, and we'll see if we can catch something this week. Again, earnings week coming in hot. And last thing I will say, guys, some people are less interested when we talk about bonds and yields, but if you're a gold trader, guess what? It is one of the most driving things to gold's price, because I want to offer this thought to you. Bonds becoming less attractive. Bonds and gold are oftentimes looked at as a cross-examine. Like, do I want to go into gold or do I want to buy into gold to bonds? These are two very conservative plays. And if bonds start to look less attractive, meaning yields, spike higher and bonds sell off, sometimes that actually can be on a true fear in the market, and that can cause gold to spike. So it's a little bit of a counterintuitive thing, because you would think, oh, isn't that dollar strength in some ways if yields are flying high? Yes, but in real risk-off environments, what we sometimes will see is bonds selling off, and it can be confusing. It's very dependent on war, things like that. Geopolitical tensions can cause that. Anyways, I want to bring someone else in to add some more context to the situation. We've got Ivan in the studio here. We'll bring in Mr. Ivan FX, see what he's got going on. Hey, Ivan, how's it going?
Pretty okay. At least I'm alive.
Good. That's all that matters. Life is good overall. We're all, should be thankful at the end of the day that we're not in some other more, tougher parts of the world right now. At the end of the day, if the worst problems that we have are analyzing markets and talk about them on streams, then we got it pretty good. So Ivan, walk us through. I know you were listening to a little bit of Frank and I's conversation about yields, gold, bonds, everything going on. What is your outlook on markets right now as we go into end of October here?
Unfortunately, dollar should rise. Unfortunately, S&P does fall. For yields to be at 5, I guess it's concerning, but there's a reason for the concern. It's not like, oh, we don't know, we don't understand. It's because PPI was higher, CPI was higher, NFP was higher, everything was higher. So it's kind of like it's a result of the data we have been given in October. So we're just going to continue the same trend going forward.
Yeah, no, I think, Ivan, I want to get your take on something, and maybe we'll ask Frank too about this. I think that the 10-year yield, a lot of people are kind of barking over and over. The bears are constantly saying this high yield is going to be direct competition to stocks, and that's why the markets are going to tank, right? People think that because the 10-year is now, you got to think of investors who are, the whales out there, the ones who have lots of money to invest, hedge funds, pension funds, whatever. They're going to start looking more attractively at bonds where they can get 5%, which is a good return if you're being super conservative and you're just trying to protect your assets, which is what many very wealthy people are trying to do. This looks more attractive. And for the first time in a while, you're getting an attractive rate on yields. But I think, in an environment where inflation is expected to be high and growth is also expected to be high, I personally don't think that 5% is that attractive, and that stocks can actually still rise in this environment. So for indices traders out there, what do you guys, what do you think? Ivan, you first, and then I'll ask Frank the same question.
5% inflation adjusted isn't great. It is 1.4, I think it is right now. So if inflation is 3.6, then and yeah, maybe 1.3. So it's not fantastic. It's not a fantastic investment. But as I just showed you guys, yield what do you call it? Yield today. For this year, sorry, on S&P is 10%. It was 11 on Friday. So still a great year return on the stock market so far this year. It hasn't been horrible, even though this October hasn't been great for me.
Right.
It doesn't mean that everything is collapsing, everything is dying, and we're not going to get any profits whatsoever. So for me, yes, 5% is high. S&P 500 is still higher by 10% by so far this year. And are we going to continue that trend? Yeah, I think both are going to increase, funnily enough, which is going to kill the 60-40 portfolio rules.
Yeah.
I'll remember that words later. I'm tired. Sorry.
Yes, it is. And, it's an interesting time because, again, oh, sorry. I think we're lagging for a second. I don't know if that was me or you guys, but sorry about that. Frank, we'll come to you. Same question. Do you think yields being up at 5% offer a competitive rate against stocks? Or do you think that stocks can go up? Do you think, yields being higher here today are not devastating to stocks?
Well, I think overall it's going to be mixed. So we're going to see ups and downs in the market. And so right now what I'm looking at is a trade just to the top of that channel. But I'm not too concerned. I would be more concerned if it was like the 2022 environment where they're talking about raising and being aggressive on inflation, and now that they're slowing down, it's a bit of a different story. So what it depends on for me is inflation, because I think that's what the Fed really cares about. They want to have a strong jobs market. Seeing higher, better economic numbers, like I think we have GDP this week. Seeing higher GDP is probably going to be, interpreted as bearish initially. But what we need to consider is the economy can still be strong and grow as long as inflation stays under control. And just seeing higher rates for longer, it will take a toll on the market, and it has. Like, we're not in any kind of bull market right now, as we can see. Since July, we've been on a steady decline with these ups and downs, but it really is just a trader's place right now. You want to buy when it looks like it's time to buy, and you want to sell it at these highs. So I would say until yields start to drop is when we get that confirmation. When the Fed says, like, our path to raising interest is over, we no longer have to focus on inflation as heavy. So up until then, I think we're going to just see stuff like this. We might see a break higher, and then followed by another downside run for however many days or months. So yeah, it's not like an
that's
upward.
a good point, Frank.
Yeah, it's going to be an up and down market, I think.
I think if you think about it, one case that keeps coming up when I listen to kind of a lot of Wall Street analysts and people who are trying to gauge whether or not how the end of the year looks, it does seem like there's a really strong case for a strong fourth quarter. You get that seasonality. You get that, you have earnings coming out this week, by the way, if you're talking indices for some of the major mega tech companies, Microsoft, Amazon, Apple, et cetera, coming out this week, which is going to be big market moving on the micro side for the Qs, for the S&P, et cetera. But I think where the struggle comes in is many people who have been saying for a long time now, that the delayed, response to all these rate hikes is going to come into play in 2024. There's kind of like this argument for, well, we get a move higher in the last blip here, as hedge fund managers may kind of chase the trade a little bit that we've seen. As Ivan pointed out, we had a strong year overall in the S&P, chasing some of that performance, and then perhaps new year we start to see some bearishness come back in, but should be interesting. Ivan, let's talk something else, unless you want to have a final thought on that. But what else are you watching here in the markets today?
I just want to announce that on my actual trading account, I am out on S&P 500. I think I had my stops somewhere below these lows here. So now it's just my paper trade. So probably just take that off. So yeah, I need to see if I can get in on S&P 500 again. Other than that, it's pretty flat on the yens. This kind of range, this kind of little candle, this green one, excites me a bit, but nothing really happening. You guys are talking about gold, to the big gold medal, by the way. To me, I'm like, shorting it? Like, really? Come on.
Are you short right now?
No, I saw someone in chat said they were short gold. I'm like,
oh, okay.
Please. Like my point here is if you're going to short anything, not financial wise whatsoever, it has to be a downtrend at least, unless you're just going to sell the peaks that we are going to continue higher. Other than that, from me on gold, it's a bit of a weird that it's actually higher. I would actually think it should go lower with the dollar strength. But the weird things I wanted to say, yeah, true. The weird things I wanted to say was Harker said they're not going to increase any more interest rate this year. Fed's Harker. And I'm like, what do you mean? So multiple people out of Fed has said, we're not going to increase in interest rates. But market has priced in one rate hike in December. And we are seeing higher than expected inflation, both PPI and CPI and everything else. So that's going to be a fun one for FOMC meeting next week.
That is actually a really good point, Ivan. If you think about it from a, outside of just what has dominated the conversation around gold, which has been mostly geopolitical, you just made a really good point about the Fed side of things. There has been, like you mentioned, a good bit of tone, lesser so from Jerome Powell, but some of the other, Bostic, you have some of the other Fed officials stating that they don't think things go much higher in terms of rates this year. They think they hold in November, and that at the end of the day, the Fed is probably not wanting to break things. They don't want to reincite what was happening in, March and April, where there was a lot of concern around regional banks having troubles. But it's also, at some point, the yields have gone up a lot, and some Fed officials have kind of mentioned that they think that that's doing some of the work for them. So there is that argument to be made on the bullish side for gold. However, I will say that I think for now, what will dominate gold's price is probably in the short term going to stay the geopolitical stuff. If there is any, we've made this point many times, but if we see escalation in what's happening in Israel, the Israeli-Hamas conflict, if there's escalation there, gold likely moves higher. And if there's de-escalation or peace talks or negotiations of any sort, gold probably shoots lower. But if you're talking about a bigger trend, which is more, in my opinion, more impactful in the longer term to gold, it's going to be the Fed's decisions, right? So very, very good points there, Ivan, on that front. I do want to say also, guys, we are live Monday through Friday on this show. However, as we close out here today, I just want to let you know that if you're not already following Ivan, Ivan does us three. We run the VIP Discord here at A1 Trading. Ivan does our coaching webinars, and Frank and I, we share our trades and insights there. Ivan does as well, but he does it within his coaching webinars where he's working with members. If you guys are looking for coaching, if you're looking to learn, if you're looking to improve, you can find us there. And also, Ivan has his own YouTube channel, which you can click right here. Click this link, find Ivan on YouTube, and you can keep up to date with his analysis and market setups as well. Ivan, thank you very much for coming on the show.
Thank you very much for having me.
Bye, Ivan.
All right, and Frank, same to you. Thanks for coming on, and we'll see you back on the next one.
Sounds good. See you then.
All right, guys. And last thing I do want to say, I just want to recap what we were talking, Frank and I were talking about with the COT reports earlier. something for you all to consider as we close out here today. You've got gold and you've got silver, the metals showing prominence in this market. Now, I want to also say that I have a long position on silver currently. I've shared that inside of our VIP group. I am also, I don't have any trades on gold, but silver has been one of my longer term long trades or bullish trades due to my kind of bias that I don't think economic slowdown is immediately coming anytime soon. And silver is in high demand for many industrial related products, batteries, cars, computers, solar panels, all of those sort of things demand a high quantity of silver. So I have a silver position, which I guess we could show really quick. I've got this silver trade on, and it's going well overall. We'll see if we can continue holding on to this one. I would like to see if silver and gold continue to break out. That will likely drive this trade higher, or will likely cause me to hold on to this trade for a good bit of time. But anyways, I also want to say you've also got the indices generally seeing some bullishness come into them, especially the good old NAS. Again, we've got earnings this week, so it'll be very interesting to see. If you guys would like access to this data, by the way, here's how you can get it. You can message us. We're going to drop a link. Here it is right here. Click this message. If you would like to get access to our COT reports, you can message in and ask about our pricing options for our software, the EDGEFINDER. Again, we've got people standing by who can get you some information there. Just click that link, direct message us. You'll be speaking with a real person to get access to the tool. When you click it, it looks like this. Again, you'll be connected with a real person. Just click chat now and ask for EDGEFINDER details. You can also click free tour if you'd like some details about the software. Again, if you're somebody who's been thinking about it, message us. We're happy to always chat about the tools that we offer here at A1 Trading. Of course, we are a software company. We build tools for traders. That is our primary purpose as a company. Of course, we do these shows and that sort of thing to add value to the community, but we are a software company. We build tools. So if you guys would like information about those tools and all the different things, we also have retail sentiment, which we didn't even get a chance to look at. Australian dollar, dollar Swiss, Kiwi dollar, pound dollar. These things are bullish by retail traders. And you take a look at the other side, dollar CAD, dollar yen, pretty bearish. And while we're on the topic, I'm curious to see what gold is doing. Let's take a look at gold here. Gold, retail traders are pretty mixed. Look at this, 50-50 just about on the retail side of things. So gold doesn't have a strong bias. And again, when we go back to gold here, we can see gold is at a level of resistance, but we've pointed out our two white lines. Keep close eye on that one, right? Breakouts low, breakouts high could cause some momentum to pick up in either direction. But truly, as we sit at this resistance, I think we're probably due for a pullback. But if price disagrees and breaks higher, then hey, you know what? Buyers might come right on in and continue to push this narrative higher. Again, heavily impacted by what is happening geopolitically right now in the Middle East. So of course, hearts and prayers go out to the people that are over there and all the people impacted. It is an incredibly sad situation, the crisis over there. And hopefully, despite what it would do to gold price, hopefully some sort of peace negotiations and less violence does come soon. So again, we'll keep those people in your thoughts and prayers. Anyways, thank you guys very much for tuning into today's show. If you did enjoy it, do me a quick favor. It really would mean the world to me. If this was helpful to you, help us out. Hit that thumbs up button on your way out. And with that said, guys, have a wonderful rest of your day. And we'll see you on the next show. See you guys.
And that concludes today's show. Our goal at A1 Trading is to give you the latest market coverage through our daily videos and articles. If you like what you see, make sure to subscribe for more. Be sure to join our Telegram, where we host trading competitions, share free market analysis with trade setups, and have exclusive discounts to our products. Our Telegram is free to join. The link is in the description. See you all next time.